All right, today we're diving into an idea that could completely blur the lines between Wall Street and the world of crypto. I'm talking about tokenized stocks. Some people are saying this is the absolute future of finance. So, let's get into it and see what all the excitement is about.
You know, it all kicks off with this really simple but kind of profound question from Coinbase CEO Brian Armstrong. What if owning a piece of a company felt just as easy and digital as using crypto? And that one question, well, it just cracks open this whole world of possibilities.
So to really get our heads around the future of stocks, we've actually got to look back a little bit at something that's already proved this whole model can work, and at a massive scale. And I'm talking about stablecoins.
It's funny, just a few years back, a lot of people thought, a digital dollar, why do we even need that? But, well, it turns out it was the answer to a couple of massive real-world problems.
First off, for people in countries with crazy high inflation, think places like Argentina or Nigeria, stablecoins were an absolute lifeline. Suddenly, they had access to something that acted just like a dollar account. And second, they just made all kinds of digital payments way, way smoother. We're talking everything from crypto trading to big international business deals, all with a lot less friction.
And if you want proof, just look at the scale of this thing. The source we're looking at here says there was something like $30 trillion in stablecoin payment volume just last year. That's huge. And that incredible success, it basically created the perfect blueprint for what we're talking about next.
Right, so we've got this blueprint that clearly works. The big question is, how do you apply that to the stock market? Well, the next logical step is taking that exact same model and pointing it at a much, much older asset class, company stocks.
And the way it works is actually pretty simple when you break it down. So you take a real share of a company, let's say 1 share of Apple, and you put it in safekeeping with a regulated custodian. Then you create a kind of digital twin for it, a token that's issued on a blockchain. And that token, which represents that real share, can now zip around the globe, totally on the rails of the internet.
Okay, this is where it gets really interesting, because this isn't just about making things a little more convenient. This simple technical tweak, it unlocks completely new ways for us to actually interact with our assets.
I mean, just look at the difference here. It's night and day, right? We're going from markets that literally sleep, 9:30 to 4 p.m. EST, to markets that are on 24/7, 365. We go from these walled-off national markets to one single global market. And settlement? Instead of waiting days for a trade to clear, it happens instantly, in real time. And that just blows the doors open for all kinds of new stuff. Think about it. Someone anywhere on the planet could buy a piece of a company like NVIDIA, just like that. Or you could finally own a tiny slice of a really expensive stock. And then you get to the wilder stuff, like building brand new financial products, things like perpetual futures, directly on top of these stocks. It's a whole new playground.
Okay, let's pause on that last point for a second, because this is one of the most powerful ideas in all of this. What if a stock wasn't just this passive thing you own? What if it could actually have rules, logic, baked right into it?
Here's a perfect example of what I mean. A company could literally program its stock using a smart contract, which is really just self-enforcing code, so that only shareholders who've held it for, say, more than a year get to vote on company stuff. I mean, think about that. It's a way to automatically encourage long-term thinking. Trying to do that in the system we have today would be an absolute nightmare, super complex and expensive.
So, okay, all this potential is amazing. But what's the catch? What's stopping this from happening right now? Well, the source material is pretty clear on this. There is one big hurdle left before this whole vision can really take off. And that hurdle? It's regulation. Specifically, the need for clear rules in the United States. That's the critical next step. I mean, the tech is there, the demand is there, but the innovators need to know what the rules of the game are.
Yeah, that's really the bottom line here. For these two worlds, traditional finance and crypto, to really merge, builders and big institutions need a clear playbook. It's all about creating a safe, predictable space for them to build out this future.
So, you see, what we're really looking at isn't just some shiny new product. It's more like a fundamental upgrade to the entire plumbing of the public markets. It's about taking the stability of the old world and combining it with the speed and innovation of this new, decentralized world.
And that kind of leaves us with one last big idea to chew on. If you can represent any asset as a token on the internet, not just a stock, but maybe a piece of art or a corner of a building, are we just on the edge of changing how we trade things? Or are we about to change what it means to own something, period?